Hey everybody, Chad Shoop here, and we're back today with some UOA. That's unusual options activity, people. We're going to be looking at just a couple trades that came up. One I tweeted about, but I wanted to dive into a little bit more about why I like that one. And then I got a brand new one for you today to talk about that came up yesterday as well. But it's going to have some time here that you can jump into it and still make this trade. And then just a freebie that I gave away on Twitter. An easy way to basically make some quick instant money here from the markets. Basically, it's a given. So I wanted to start with that today. So let's jump in. All right. So on Twitter, I've been tweeting quite a bit. So make sure you're following me at Chad Shoop Guru. You definitely want to check out these tweets. We're talking about UOA. We're talking about earnings. We're talking about ways to make money, like I'm going to show you today on Bed Bath & Beyond. And no, it's not hyping. It's not jumping into the meme craze either. It's a totally different approach to kind of what's going on in the market that a lot of people just totally ignore. Because they don't think it's worth it for them, but it's basically free money from the market. So I'm going to show you how that works today. And of course, like, subscribe to the page, scroll below, leave me a comment. I'm still doing my quick takes, my bank it or tank it videos. So any stocks that you want me to take a look at, you can leave me a comment on Twitter. You can leave me a comment below here and YouTube. Anywhere you can just let me know what companies you want me to feature in an upcoming video, and I'll be sure to include those and add them to my list as stocks to continue to rotate through to feature in these videos and to give you my take on them. Now, I'm still up to something that's in the works. So scroll below, there will be a link that lets you sign up. That way you can just kind of stay up to date with the latest that's going to be going on, because I am up to something that's going to be coming up soon. So make sure you scroll below, sign up for that, like and subscribe to the channel. Now, Bed Bath & Beyond. This is a meme stock. It's been shooting higher to the moon. And I mean, I would love to be in on it for the big race higher. And I mean, I'm all about these 60, 70, 80% gains in a matter of days. It's awesome, and I love that people are making money from it. But if you missed the rally, I don't think now's the time to jump in. So I'm not trying to jump in on a meme craze, but when you take a look at the options market, so what happens? The stock surges higher. It's trading at, this is where it closed yesterday, Wednesday, $23.08. That's where it closed, $23.08. It was skyrocketing higher. I can pull up the chart too and show you. But look, when we look at the options market, this is what I tweeted about September 16th, less than a month away. The $4 option was going for 10 cents at the time. That's a 2.5% gain. I know a lot of people did, 2.5%. They don't get excited about it. They don't really care for it. It's nothing to write home about. But look, people, this is practically free money. I'll show you on a chart. But if you have the ability in your accounts to sell to open put options, which if you have that ability, then you probably know the risk. The risk is that you would end up having to buy Bed Bath & Beyond at the strike price you sell it at. But in return, you keep the money that you're selling it for. So in this case, 2.5%. And if the stock stays above $4, or heck, you could even do $5. That's 13, 15 cents a share with a $5 strike price. You're still looking at a 2.5 to 3% return here in less than a month. Annualized, that's a 30% return. So over the full year, it starts to add up to some pretty big returns, but it doesn't come up too often, and there's only certain times that you can do it. But right now, this is a great opportunity just to skim just a little bit of money off the market. I mean, take a look at the stock. This is what the stock did. It's just a straight run higher. Now, I don't expect it to continue to go higher. I mean, of course, you never know with these meme stocks where the top is or how quick they're going to fall after that. We know it's going to pull back. But look down here on the chart at where we're saying that we're willing to buy at. I mean, we're down here at $4, $5 a share, which it would have to pull back, erase from where it was before, erase this complete move, and then fall below that. I mean, even $5, I'm comfortable with this, because I don't think that from now until September 16th, that Bed Bath & Beyond is going to fall below $5 a share. I just don't see it happening. On the way down, it's going to be volatile as well. Up and down, going to be halted several times. So it's going to be a lot of things that kind of delay this drop. And then if you're talking about $4, I mean, forget about it. I don't think that this thing's going to get down anywhere near $4 over the next 2 or 3 weeks. And they're paying 2.5%. I mean, on large cap stocks, over this period, you're lucky to get like 0.02% from the stock on a trade like this. So especially this far away, I mean, the options wouldn't even be available on a fall like this. That's basically calling for the stock to fall, 70 to 80% in a matter of 2 weeks. It's possible. It's a crazy market right now. Anything can happen, but I don't think it's likely for Bed Bath & Beyond. I think that they'll hold above those key levels. So I think that's a great trade if you can sell to open put options in your account If you don't know what that is, leave me a comment below or reach out to me on Twitter, and I'll be sure to explain it more, walk you through it a little bit more about how to sell to open put options for income in the stock market. But just that was a great opportunity. Now, the stock I tweeted about today was PayPal. This had some unusual options activity to the tune of about 1.8 million. Now, I'm going to just show you how it stands out here on the chart. This was the December option. And now we can see that I have volume pulled up, open interest pulled up for the call side and for the put side. So volume, open interest. You can see where our trade stands out. Put options right here, the 97.50 strike price. The open interest was just 426. You want to see volume that is above open interest because that tells you that you have new buyers coming in. This has to be a buying trade as well, which the scanners are helping us to filter all that noise out to where it's not somebody selling to open this put option like I mentioned that you could do with Bed Bath & Beyond. These are fresh buyers coming in that's more than the open interest, so it's not somebody in there that had sold to open put option and now they're buying it back to close it out, or all sorts of things that could go on. But even after filtering all that out, the biggest issue that can still come up is hedging plays. These can be a hedge fund that's going to hedge a stock like this, like PayPal, or especially the stock we're going to talk about in a minute as Apple. There's hedge funds that own millions and millions and millions of stock in these companies, millions and millions worth. And to them, it's nothing to go and throw out around several $100,000 or even a couple million to act as a hedge for their overall position. So a lot of times that could be the case, and it's hard to filter through all of that. So what I like to do is line it up with the chart and take a look at what's going on. But I just wanted to show you this real quick. So we have PayPal, and you can see here as we pop out this chart, and this is the chart of the option price, not the stock. So it's pretty cool. We can see the option. This is a daily chart right now. So the first trade was on August 3rd. You can see very small volume down here on the bottom. These shaded areas, the columns that come up are the volume areas for the chart. Now here we had some buyers come in. It's about 200 contracts traded this day, about another 200 traded this day, and then bam, you see what happened yesterday. 1,700 and some contracts traded on this stock as it's starting to rise here, which means that the stock was actually falling because these are put options. And then when we dive into the minute by minute shot here, we can see that these came in at 11:20 a.m. The big move in buyers, but look what happens after this. These little trickles that continue to come in. We had a little bit here, a volume of 21, and we had another little spike here, a volume of 136, and then volumes of 1 and just a couple throughout the day. And what this is people really trying to pick up on, they saw this, and then just a lot of people are trying to pick up on what this big move may or may not signal right now, because they bought some time on the calendar. They went out to December 16th. They have a couple of months here that this thing can really run and turn lower. They have plenty of room for the stock to move to the downside after the big run that they've seen. And that was a key reason that I wanted to highlight this to begin with. So when you looked at PayPal on the price chart, here it is running off the lows from the bottom. It's up, about 45% so far on this move higher. Now, I shaded these candlesticks based on the relative rotation graph. That's what I like to use to help gauge momentum and relative strength in the market. It's leading the market, and that's great to see, but then usually after that we start to see it weaken. We can see it right back here on the chart. Once it gets into the leading quadrant, it tends to weaken, and we start to see it pull back a little bit. I don't expect it to be that sharp, but I just expect this to weaken a little bit, slow down, and then once it gets into the lagging quadrant, start to head lower, and that's these red bars. And that's usually when we see the biggest moves to the downside as it's going through this transition. And I think right now, when we look at the overall market, what's going on, it's due for a pullback. It's been on a nice run. The Fed's adamant about continuing to increase interest rates. And what was yesterday about? How's the market going to try to go up when the Fed's minutes came out? That just reinforced the fact that they're going to continue to hike interest rates. That's your red flag right there. That's telling you that this Federal Reserve is going to continue to hike interest rates until they get more damage to the economy that they haven't seen yet. So it's going to continue to hike interest rates. That's bad news for the economy. I don't think it's going to be strong enough to kind of shake that off. I think we're going to see a deeper recession than what we're already kind of sitting in right now due to the Fed and due to them trying to stop inflation. I'm not saying what they're doing is wrong. I'm saying that they're doing it to stop inflation. Inflation's still out there. They said they want to see it come down dramatically, not just a little bit, not just slowing down, but dramatically before they ease off the interest rate hike. So that's all kind of having me to lean bearish. And that's why the next trade that I wanted to show you really piggybacks on that. So it was on Apple, which is a large stock, and these hedge funds own hundreds of millions of dollars worth of this one company. So for them to throw around a couple of million here and there doesn't really mean anything. So the action that I saw yesterday come up on this one was the November 18th, 2022 put options. We have the 29,000 contracts traded here. You see the open interest was 17,000, but these were fresh new trades coming in at one time. And another way that we know that these are unusual trades as opposed to just a normal trade in the market, one thing that we look for is what's called a sweep execution, where whoever is jumping into this trade, they're not interested in trying to get the best price and trying to wait for a big block order and push it through at the price that they want. What they're saying is to just throw it out there on the market, let all these different exchanges fill the order as quickly as possible at the best prices they can get, but they don't really care what price they get. They just want it filled right away and to get this thing on the market. And you can see here some massive volume, this little blue bar spike over here. This thing goes back, it's been trading since January of 2022. So it's been trading now for the whole year. When it first came on, had some volume there, and they didn't sell. You can see that they got in, if they were buying, around $18.32 per share. This thing went up to 40s. They didn't sell. We can see that there's no big volume moves down here. And its volume's been starting to creep up in this put option here as the value's been coming down until today. Then bam, we see the big move in the put option, the big volume spike there to 29,000 trading. And we can go in here to the minute by minute ticks. So you can ignore this purple pink line going through here. It's the theoretical price. So we can ignore that. What I want you to see is that we still have these blue bars coming in here, identified, especially over here on the right. These were identified as buyers coming into the stock. And look at the times. This is right after 2 o'clock, 14:06 military time, 2:06. That's right after the Fed minutes were released at 2 p.m. And then we had it follow through here later in the day, another move into the stock. And this, as you can see, the action, the stock wasn't moving yet. So kind of as I was mentioning with the Federal Reserve agreeing to continue to hike interest rates and basically laying it out that they're going to continue to raise these rates and the market not reacting to it, this trader, I believe, took advantage of it and loaded up again on their bearish positions here on Apple. So we have the trader getting pretty bearish on Apple, loading up on some put options that came up as unusual activity. Now take a look at the stock. This stock is not beaten down like the rest of the market. I mean, in fact, it's trading almost at all-time highs. All-time highs. That's pretty remarkable. It's everything that's been going on. But look, that's where Apple is today. The large tech stocks have not rolled over yet. The small, the ARK innovation ETFs, those types of stocks have just been obliterated. And now they're on massive runs of 30, 40, 50%. But from their peaks, they're still way down here. It's like a blip on the chart, like we looked at PayPal. This thing is really barely budged compared to Apple. It goes on this nice run, and it's teasing up here with all-time highs. Now, personally, I don't think they get there. I think that they get close. I think they can flirt with this level. I just don't think that they push through. And I think I'm going to follow up on this concept of the overall market environment that we're in now with the Federal Reserve, the interest rates, the tech stocks activity that we're seeing now, the meme stock craze, just everything that's kind of building up and going on. I want to take a video to step back and talk about the overall picture of the market. So I think that's going to be next week. But I still want you to send in some questions, whatever is on your mind, and let me know what stocks you want me to feature in these upcoming videos, because I'm going to come back around to it. But next week, I think it's important just to take a look at this, because when you see stuff like this, it's pretty bullish. And it's really bullish, actually, to see a stock flirting with all-time highs, maybe even pushing through that. But I just don't think Apple does it. I think there's too much headwinds right now about to hit the stock based on the interest rate environment in the market and inflation. I mean, consumers are going to have to go out and buy phones that are going to end up costing more. Everything's costing more, and it's going to hurt them in these upgrade cycles for Apple. That's going to come across 100%. So we'll see how that plays out. You can see the shaded colors here. It's yellow, which means that it's weakening right now. So the next quadrant that we expect it to go to is red, which is lagging. So I looked at it over here on this sector rotation. I included Apple, so you can see it down here. Apple and PayPal is far off to the right. I just wanted to show you that it's actually heading down here towards, going to head into the lagging quadrant. That's kind of where it's heading now. So it tried to turn and go higher, and that was in this big run that we've seen so far. but it's holding back because the rest of the market was running as well, and Apple didn't do enough to kind of get back into that leading quadrant. So that's a warning sign for me. I think that we're going to see Apple top here very soon. If not, yesterday was probably the top, and then start to pull back dramatically from here. So these put options are looking very timely and very, very confident for this trader to come in and lay out that kind of money on this pullback here in the market. So that's all for my video today. Again, we looked at a couple things today. UOA talked a lot about the Fed in and out of the day in the selling to open put options. So as you go through this video, if you have any questions or comments, be sure to leave them on Twitter, drop them below the video, like and subscribe to the channel. Make sure that you sign up so that way you can stay up to date with what's coming next for me. I'm up to something big, and I want you to be a part of it. So make sure you subscribe below so that way you'll be able to stay up to date with everything that's going on. So that's all for today. Until next time, I'm Chad Shue.